Hey everyone, what's up? I hope you're all doing well today. Now, if your name happens to be Sean Diddy Combs, this might be a week you'd rather forget. Let's talk about what's going on because things around Diddy's world just got a lot more complicated. Reports say that Diddy has agreed to hand over several personal items to the federal authorities. When you look at the exhibits list, it includes a number of phones, laptops, and computers, basically every electronic device in the house. People have been asking, why so many devices? Well, it looks like investigators took electronics from every property connected to him. Remember, his kids and staff have their own phones and laptops too, so it adds up quickly. There's also talk about a video labeled something like Ibiza trip. Nobody really knows what's on it, but that detail made people curious. Still, that's not the biggest point here. What's more important is what the federal agreement actually says. It doesn't prevent future forfeiture. That means investigators can still connect other assets, houses, cars, jets, or accounts, to possible violations and request ownership of them later. In plain words, if anything was used to help or hide an illegal act, it could still be seized down the line. Proceeds, property or money gained through illegal activity. Facilitation property. Anything used to commit or promote a crime, even if it wasn't bought with illegal funds. For example, a studio, a rented home, or a private jet could be considered facilitation property if it was used to arrange or transport people for unlawful purposes. Even if the property was purchased legally years ago, it can still be subject to forfeiture if prosecutors prove it helped carry out the conduct in question. This detail gives the Department of Justice broad authority. They don't have to show that every dollar was dirty, only that the property was connected to an unlawful act. That's why this agreement is serious. Even though Diddy isn't automatically giving up all his possessions, he's no longer fully protected from later actions if links are proven. Investigators also examined how certain payments were made. According to court filings, some travel and housing costs were reportedly paid through business accounts rather than personal ones. That distinction matters because if a company account is used for improper transactions, those funds can be treated as tainted. If prosecutors can trace payments from corporate funds to questionable activities, they can move to seize those accounts or any assets purchased with them. Let's say an event took place in a rented home or hotel room. Even though Diddy doesn't own those places, they can still be considered facilitation properties if prosecutors believe they were booked for unlawful purposes. Usually, property owners like hotels or Airbnb hosts are viewed as innocent parties, but the lease or right to use the space can still become evidence or even be forfeited. The government often looks for clear documentation, flight logs, payment receipts, digital records, or messages showing intent. They don't always go after a person's main home or private jet because those cases can drag on in court for years. But temporary rentals and easily documented expenses are faster wins. If prosecutors show that business accounts were used to cover these costs, they can argue that the company itself became part of the operation. That moves the issue from a moral question to a financial crime issue, something the government takes very seriously. Here's what the government could potentially seek. The specific corporate bank accounts used for the payments balances traceable to those funds' business assets purchased with that money, like equipment or vehicles, even ownership shares in companies if the business was used to facilitate or conceal wrongdoing. This is similar to what happened in past corporate corruption or fraud cases, where business entities and accounts were frozen during investigation. Prosecutors don't need to show the entire company was involved, only that a specific transaction violated the law and was intentional. Evidence might include wire transfers, accounting entries labeled as travel or event expenses, reimbursements, or internal emails authorizing payments. What usually happens next is that the Department of Justice asks a judge to include the identified accounts in a forfeiture order connected to the case. Even before a conviction, the government can start civil forfeiture, a separate process that targets the property itself instead of the person. That means even without a verdict, they can freeze or seize assets suspected of being involved in wrongdoing. Another layer to all this is the IRS. If investigators believe business funds were used improperly, they can audit for possible tax issues or false expense deductions. Payments related to personal activities can't be written off as business costs, so this can create serious accounting problems. If funds were moved out of business accounts after an investigation began, the government can even use the clawback or snatchback rule, essentially claiming that the money was transferred illegally during prosecution. In that case, they can put liens on properties or recover the funds from other accounts. Any property bought or maintained with those funds can become traceable property, meaning it's tied to the alleged transactions. Even the company itself can be listed as a defendant if the prosecution argues that it helped conceal financial misconduct. For investigators, this method is often easier than relying only on witness statements because bank records and accounting logs provide a clear paper trail. So, what's next for Diddy? Right now, everything depends on how deep the financial review goes and what new evidence surfaces. Federal investigations can take months or even years, especially when multiple companies and accounts are involved. If prosecutors decide to move forward, they could file new forfeiture requests against specific business accounts or real estate properties. But it's still too early to know how far this will go. At the end of the day, this situation is a reminder of how complex financial investigations can become, especially when corporate funds and personal spending overlap. Even if nothing illegal was intended, using company accounts for personal purposes can trigger intense scrutiny. And when federal agencies start connecting financial records to possible violations, it can snowball quickly. So while the headlines sound dramatic, the real story here is about how the system tracks money, connects transactions, and enforces forfeiture law. We'll have to wait and see what happens next, whether the focus stays on the electronics and documents already seized or expands into a wider financial case. Do you believe this investigation will lead to major asset forfeitures, or will it settle quietly? Let me know your thoughts in the comments below. Don't forget to subscribe, and I'll keep you updated when more details come out. Count these words. As this investigation moves forward, one of the key things to understand is that cases of this scale rarely move quickly. Federal investigations into financial misconduct or asset forfeiture usually unfold over several phases. Each phase involves teams of forensic accountants, legal analysts, and agents who review thousands of pages of transactions, property records, emails, and corporate filings. Their goal is simple but extensive: to follow the trail of money from its origin to its final use. In Diddy's case, the process likely started months, if not years, before this recent wave of attention. The recent agreement to hand over electronic devices and other materials is only one part of a much larger picture. Those devices, phones, laptops, and computers, hold vast amounts of data that can be cross-checked with financial documents. Investigators look for messages, travel logs, payments, or digital communications that confirm or contradict what's been said publicly or in court filings. It's important to remember that when federal agencies handle asset-related cases, they rely on the principle of documentation over speculation. Every step must be supported by hard evidence: timestamps, bank transfers, receipts, contracts, or emails. That's one reason why these cases can take so long. Even after initial evidence is collected, federal attorneys must build a consistent and traceable story that shows how assets or funds were used and whether they were linked to illegal activity. Now, one critical distinction in cases like this lies in the difference between criminal forfeiture and civil forfeiture. Criminal forfeiture happens after a person is convicted of a crime, and the court rules that certain property was involved in or obtained through that offense. Civil forfeiture, on the other hand, is more direct. It targets the property itself rather than the person. The government can pursue civil forfeiture even without a conviction if they can show probable cause that the property was connected to unlawful conduct. This gives investigators flexibility in complex cases where not every act results in a criminal charge. In practice, this means that even if Diddy is never formally convicted of anything related to these claims, the federal government could still pursue specific assets, accounts, or business interests. Those assets would remain frozen during the proceedings and potentially transferred to government custody if the court agrees with the forfeiture claim. The process isn't fast. It involves public filings, hearings, and responses from defense attorneys. But once a forfeiture order is approved, the government has broad authority to manage, sell, or reassign the seized assets. For Diddy's legal team, the focus would likely shift toward negotiating the scope of what's at risk. In high-profile cases, attorneys often work to protect core personal properties like main residences or essential business holdings, arguing that they were not directly involved in the alleged conduct. At the same time, they may offer to settle or surrender other assets voluntarily, such as secondary properties, vehicles, or accounts, in order to limit further exposure. This kind of negotiation is common, especially in cases involving well-known public figures. It allows both sides to avoid lengthy trials while still satisfying some of the government's demands. Another layer of complexity comes from the companies associated with Diddy's business empire. He has built multiple brands across entertainment, fashion, beverages, and media. Each of these entities operates as a separate legal structure, but investigators can still look at how funds move between them. If they find that any of those businesses were used to pay for activities unrelated to their official purpose, prosecutors could argue that those transactions helped facilitate the alleged conduct. That would give them grounds to target the corporate accounts or the ownership shares in those companies. In such a situation, accountants and auditors become key players. Their work can either protect or expose a client. Clean, well-kept records that clearly separate personal and business expenses can provide a strong defense. But if the lines are blurred, if personal spending is disguised as business costs or entertainment expenses, it becomes much harder to explain those payments away. That's where the IRS steps in. Federal tax law requires strict documentation for any business expense that's deducted, and if auditors determine that deductions were false, it could lead to tax penalties or even criminal charges for fraud. From a broader view, the Diddy case has drawn attention not only because of who he is, but also because it demonstrates how financial systems are monitored in the entertainment world. Artists, producers, and executives often manage massive streams of income. Touring, royalties, partnerships, endorsements, and that financial complexity can create risk. Even without malicious intent, mismanagement, or poor accounting practices can trigger serious consequences if company funds are used improperly. When high-profile individuals face federal investigations, there's also a powerful ripple effect on their businesses and public image. Investors, collaborators, and sponsors often pause their involvement until the case is resolved. This kind of uncertainty can impact brand value, stock ownership, and even contract renewals. In Diddy's situation, any disruption in cash flow across his companies could influence the wider network of employees, vendors, and creative partners who depend on those businesses. That's why crisis management teams typically work alongside lawyers during such periods, to protect both legal interests and public perception. The federal government, for its part, tends to be methodical and patient. These agencies do not operate on social media timelines or public expectations. They build cases layer by layer, often waiting until every piece of evidence is verified before making a move. That's why, even after an initial agreement or settlement, new actions can still emerge months later as additional findings are reviewed. In some cases, investigators can reopen or expand an inquiry if they discover related evidence in another jurisdiction. If new financial links are discovered, for example, if a payment trail connects one of Diddy's companies to another party already under investigation, the scope could widen further. That's the nature of financial investigations. They often lead to secondary cases, especially if shared accounts or business partners are involved. This possibility underscores how one initial forfeiture or settlement rarely marks the end of the story. The role of the media also plays a significant part in shaping public perception. Every filing, court update, or leaked document can generate days of speculation online. But while public commentary can be loud, the courts rely solely on documented evidence. The gap between what people assume and what the legal record shows can be vast.